It's all about China today on Reset. Their GDP came in yesterday a little over 7%. That's the lowest growth rate since '09. We'll be getting Vince-Lanci's thoughts up next. Vince, as always, thank you so much for being with me.
Thanks for having me. Always a pleasure.
So we are focused on China today, Vince. As we all know by now, their third quarter GDP coming in at 7.4% growth. That's the lowest growth that the country has seen since '09. How has this been impacting markets?
Well, the markets are taking a decrease in growth in China bearishly, constantly expecting higher growth, and it's not to be contradicted by recent actions. So the markets in general are banking ever so slightly on China to bail out the world, as they have been for 2 years, and it's not happening.
So Romney, the other day in the presidential debate, stated that China is a currency manipulator. Do you agree with that?
Sure. Every country that has a fiat currency is a manipulator. China is the one that we care about right now. We manipulate our currency. Any country that pegs its currency to another currency, like China does the dollar, seems more egregious in their manipulation, but every country does it because it's based on math. It's not based on a physical object.
So before we continue talking about China, Vince, let's look at that chart you sent me earlier on gold. Let's see what the metal is doing right now.
Sure. Our current view is that gold is likely in a sideways trading range with a decent chance of a washout if it goes below 1730. Our longer term view is bullish. Now the chart I sent you is not one that we subscribe to, but it is one to keep on your radar. It's a very common old school formation that may be forming on the weekly chart called a cup and handle. And the cup and handle, really when you look at it, is a double top on the ends with a rounding bottom in the middle. And then on the right-hand side, as drawn by the white lines, you see a channel decreasing, and that's actually a bull flag. You don't know if you should be buying the market until it goes above that double top. That's your momentum indication to buy to get in. So keep your eye on that if you're bullish. But we're talking about a weekly chart. That could be months before that comes to fruition.
Vince, there seems to be a growing perception that China may not be this big buyer of gold as many folks thought. I read a recent HSBC report that there was a 29% drop in mainland August gold imports from Hong Kong. What are your thoughts on what's happening in China?
There's no doubt that Chinese demand has dropped in recent weeks. And the analysts that cite that also contributed to a slowdown in economic growth in China. We take a different view. We recognize the slowdown and acknowledge it. We just think China is price sensitive. Gold is not a commodity to China, it's money. The higher it is in price, the less they'll buy. But when it goes down, they will be buyers in a big way again.
Still staying on China now, Vince, we had a good question from one of our viewers last week. You had said last week that the faster China can diversify out of dollars, the faster they can help their domestic inflationary problems. The viewer wants to know if you could elaborate on this statement.
Yeah, that's an interesting question because it actually dovetails or ties into the HSBC and other reports about the decreased demand out of China. You have to not, there is a decrease in Chinese demand for commodities. By commodities, I mean physical commodities that are used to build things. They're not building any more factors, hence decrease in coal, iron ore, and copper demand. They are continuing to buy food because they need it. Now, to address the viewer's question, China, every country has a currency reserve. They have a reserve of foreign currencies to hedge their own currency's exposure as an inflationary hedge. When you look at countries like the US and Germany, we have 70, if you look at our FX reserves, other currencies we have in reserve in case we need them to buy foreign things, we have enough gold to cover 75% of that. So we've got a lot of gold as a percentage of our currency reserves. Germany, 74%. Italy, 72%. China, 1.6%. What does that mean? That means that they have a lot of dollars and not a lot of gold. So if their currency is pegged to our currency, 1-to-1, and we begin to have inflation, then they will have inflation. Then when they go out to buy soybeans to feed their people, they will have to pay more. So what must they do? Regardless of their economic situation, they need to diversify and get out of their dollars. A good way to do that is by buying gold.
Okay, Vince, let's change topic altogether now. Let's look at our word of the week, and I've chosen fiscal cliff because we hear it all over the media now. What does it mean to you, and should we care?
Yeah, the fiscal cliff has been a nice soundbite, spoken everywhere, and I haven't seen anyone explain it. There's an assumption that everyone knows what it means, but we can describe it very quickly. The fiscal cliff is an event. It's a moment in time where we either let the Bush-originated tax cuts expire, hence raising taxes, where we prolong and let those tax cuts or do something to keep those tax cuts on, or we find some sort of middle ground. It's a bad situation. If we let the tax cuts expire, you reduce the deficit, but you also raise taxes on people that aren't working or that are working and not making a lot of money. If we prolong the tax cuts, you increase the deficit, and we become much more like Europe. So that's really the thing here. We think the fiscal cliff will be dealt with using a stopgap measure, which is a fancy way of saying kick the can down the road for the next president. So we don't think any resolution will come.
Finally, Vince, when I was speaking to trader Peter Hugg yesterday, he was saying that he's going to be short gold short term as a trader. What are your thoughts on that? I
like the idea. Some people are short now. Some people are long now as short-term traders. We're flat looking to sell it below 1730. So Peter may be selling strength, looking for weakness afterwards. We're more momentum oriented in the short term, and we'll sell weakness looking for a washout. So we think it's a trading range with a slight bias lower.
Vince, thank you, and we'll see you soon.
Thank you. Have a great day.
Thanks for watching this edition of Reset. You can email us at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.